In example 12, we look at the journal entries for the subsequent measurement of the lease liability. In the Rocco Limited example, the payment date and the year-end date of the lessee coincides. How would the journal entries now change if the reporting date of the entity do not coincide with the payment dates in terms of the lease contract? So assume the same information as above, except that Rocco Limited has a 30 September reporting date. The annual lease installments are still payable annually in arrears on 31st December. Whenever you have to deal with a scenario where the year-end date and the payment date of the lease agreements do not coincide, it is advisable to make use of a timeline. The first payment is on 31st December. Each payment comprises an interest component and a capital component. The interest component of this first payment has already accrued over time. Since commencement date to year end, 9 months interest has already accrued and has to be accounted for. Paragraph 36A says that the interest accrued needs to be added to the balance of the lease liability. Then, in the following financial reporting period, the remainder of that interest for 3 months will be accrued in the following financial reporting period. When we look at the journal entries, you will see that we now have to write journal entries at year-end date as well. The first journal entry is for the accrued interest for 9 months. So you still use your amort 1 function, get the interest for the first payment, and then you apportion that for 9 months into the reporting period. Your debit is interest expense through profit and loss. And please note the credit leg of this entry goes to the lease liability, and that is because of paragraph 36A. We do not create a separate interest expense accrual account. In this example, we also have maintenance expense. As we assume the maintenance expense is rendered throughout the reporting period, we now bring in a maintenance expense for 9 months as well, being the 300,000 Rand times 9 over 12, and this is now taken to an accrued expense because this expense has not yet been paid at year end. The next date for journal entries is 31st December, being my payment date. This now falls in the new financial reporting period. So now we have to account for the 3 remaining months of the first payment's interest that falls into this new financial reporting period. So it is still the first amort period's interest apportioned for 3 months, where we recognize an interest expense through profit and loss, and we recognize that as part of the lease liability with a credit entry. Secondly, we have to account for the actual payment of 2.4 million. The lease component of the total payment is debited to the lease liability. This gives effect to paragraph 36B, and we reduce the lease liability with the payment. We still have to recognize 3 months of the maintenance expense through profit and loss, and we also reverse the accrued maintenance expense that was recognized on 30 September that is now being paid. If you look at the remainder of these examples, you would see that on the next year-end date and the next payment date, we follow the same process.